What actually is the share market and why are the numbers moving around so much every day? Welcome to Get Started Investing, a podcast where we help you make the most of your money. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this episode. What is the share market? It is a fundamental question. Also, is the share market different to the stock market?
Yeah.
These are some of the questions we're going to answer today. And it was inspired by a question we got through our contact form.
Hi Bryce and Ren. I'm currently investing in some ETFs that are listed on the ASX and then some single stocks that are listed on the NASDAQ. My question is there any difference in how these two stock markets work? And why do the prices change so much day to day? Thanks.
Love it. Thank you so much for the question. We love hearing from you. Head to equitymates.com/contact to leave us a voice note. We love hearing your questions and we will prioritize your question if it does come through as a voice message. But Ren, in today's episode, we are going to cover what is a stock market and how trading actually works, what moves the share prices of all the companies that we're invested in, and what matters and what doesn't matter as an investor when it comes to the stock market.
And just to answer a question I posed in the intro that we should just answer quickly, what is the stock market? What is the share market? How are they different? They're the same thing.
No difference.
They're two terms that are used interchangeably. It's just another way that finance industry jargon makes things a little bit more confusing.
Is shares more UK, right? UK, Australia, the share market?
I actually have no idea.
Yeah, I think that's my vibe.
Okay.
Yeah.
Cool.
But there's no difference.
And if you want to make it even more confusing, ASX, the S isn't stock or share.
No, securities.
But
it was stock, but they changed it.
Yeah. So I think, look, stocks, shares, terms are used interchangeably. Either way, they mean the same thing, a ownership of a company. Percentage ownership of a company.
Well, that's probably a good place to start, Ren. Before we dive into the nuts and bolts of it, we should go back to first principles of a business.
Yes, the best way to think about the stock market is to not think about the stock market at all. Yeah. So let's imagine a business that we're running together.
Equity Mates.
Espresso Mates.
Espresso Mates.
We're running a cafe. We're keeping
goodness.
it. We're staying in the real economy. None of this digital media stuff. This is a business that we can look and feel. Yeah. Espresso Mates.
Love it.
Or as you would call it, Espresso Mates.
No. That's what my father-in-law would call it.
Oh, wow. Yeah. Drive by there. Okay, so you and I start a cafe and equal partnership, 50-50 ownership.
Of course.
So right there, like the first principle that we've established is that the ownership of a business can be split.
Yeah.
You and I can both own shares in a business and it's split equally 50-50. Let's say we're crushing it.
Of course.
You're
no doubt.
You're making music behind that behind that espresso machine. You know, you're making it sing.
What are you doing?
I'm banter behind the counter. I'm keeping spirits high.
Croissants.
And I keep that place spotless. I keep it clean. So let's say we're crushing it. We want to open a second location. But cafes are a pretty low margin business. Yep. We're not really rolling in dough.
No.
Except the croissants are the back.
Yes.
So to raise money, we want to bring in a partner.
Yeah.
But God, it is hard to find someone.
Yeah, well, not many people probably want to go thirds in a cafe shop.
Yeah, especially since you're insulting your father-in-law in the way he pronounces espresso. We're calling around. We're asking people if they want to invest. No one wants to invest in a cafe. It takes ages. It's a manual and arduous process.
It's a nightmare.
We finally find someone. And so that we get some money from them, but in return, they get some shares in the business.
Yep.
So we issue more shares. And now you own a third, I own a third, and our investor owns a third. Espresso Mates is killing it. It's taken off, but we want to move on with our lives. You can only be slinging coffees for so long. But we want to sell this thriving cafe business. And again, it's hard to do. You got to ring around, you got to find people who want to take over the business. Maybe you got to go to a business broker. You have no idea how much you should sell your cafe for. And we probably lose out big time in that process. Yeah. And so the stock market exists to solve some of those pain points.
Yeah.
To make what the experience we've just explained easier.
So I guess the two major things there that underpin that story, Ren, are businesses can be divided into multiple shareholders, ownerships. As you said, we brought an investor on 33%. And businesses can be bought and sold. We wanted to sell Espresso Mates and move on with our lives. And fundamentally, this is what the stock market does.
Yeah.
Allows you to sell and buy parts of businesses and do it between multiple owners.
Yeah.
It's pretty simple.
And so the only question is, where are we going to do it? And the stock market at its fundamental form, like if you look back in history, it was just a place where buyers and sellers of businesses met. It was just a convenient location for them all to get together to know that this is where we're buying and selling.
Yeah.
And that's what Wall Street was. That was just the place that people met. Quick quiz question for you. Do you know the world's first stock market?
No.
It was in Amsterdam, and it was all about buying and selling shares in the Dutch East India Company.
Oh, there you go.
Yeah.
Wow.
So that is literally just, the stock market is just a convenient place for everyone to meet up.
Yeah.
All the bells and whistles, all the trading pits, all the people yelling and screaming, that was all just growing out of
I want to buy your business.
getting everyone together.
Yeah.
And just doing it in a convenient location. People with cash, people with businesses meet up and trade.
And that still happens today, but it happens in a digital world, obviously. There are still some stock markets, like the New York Stock Exchange does still have a floor where people get together and buy and sell stocks, but it is all done in a digital world. And rather than splitting Cafe into 3 shares, companies now are split into millions and millions of shares.
Yeah, so Apple, for example, is split into about 16 billion shares, and every day about 90 million of those shares trade hands.
Crazy.
Yeah.
Crazy.
So it's a bit bigger than Espresso Mates, but the principles are the same.
Yeah.
It's just on a much larger scale. So then I guess the natural question that comes out of that is, like, what actually happens day to day on the stock market?
Day to day on the stock market, buyers and sellers get together and trade in and out of companies. That's pretty much it. It's pretty straightforward. I wake up and say I want to be an owner of Apple, and I go to the stock market and hope that there is someone on the other side who wants to sell their ownership in Apple, and we trade those shares.
Yeah. So let's think about the Espresso Mates example and those pain points that we identified earlier. First of all, businesses that are crushing it but are looking to raise more money, it's convenient for them to find investors on the share market. They don't have to go ringing around. They don't have to go searching. They can just put it out to the market and know that there are people who are interested in response. So that solves that pain point for us as the runners of Espresso Mates.
Yes.
Similarly, when we want to move on with our lives, or we want to free up some money to, do whatever we want, it's a convenient place for business owners, for early investors, for early employees who have shares to sell those shares.
Yeah.
And so it doesn't require us going to a business broker and having no idea what the price we should sell our business is. We can just sell our shares conveniently that day.
Yeah.
Yeah.
So that's the principles and what the stock market is. We're going to take a quick break. And on the other side, we're going to talk about why share prices move around so much on a daily basis and how trading actually works. We'll be right back. Welcome back to Get Started Investing. We are going deep on what the stock market is. There is no difference between the stock and share market, and why prices move around so much. And let's pick it up there, Ren, because it can be overwhelming looking at your brokerage account and seeing literally minute by minute, second by second, stock prices moving around in all sorts of different ways.
Yeah, well, I always go back to an interview we did with Emma Fisher years ago, and a quote that she said stays with me to this day, which is that share prices move quickly, but businesses change slowly. And I think people who are new to the stock market might get really confused when they see how much prices change, or they're watching the 7 o'clock news and they see Alan Kohler talking about BHP was up 4%, Apple was down 3%. Because it's like the value of these businesses can't be moving like 4% in a day.
No.
Like what decisions are CEOs making in that day?
Yeah.
Like how many home loans are Commonwealth Bank selling
Yeah.
in that day to make them 5% more valuable?
Maybe I doubled the price of coffee.
At Espresso Mates?
Yeah.
But that's not what share prices are meant to reflect.
No.
I mean, well, there's a whole academic theory around. Let's not worry about that.
Let's definitely not worry about that.
What share prices actually reflect is just the last price at which shares traded hands.
Yeah.
So if Espresso Mates, let's say over the course of the day, there's 5 share sales, and the first one's at $100, the second one's at 101, third one's at 99, fourth one's at 100, fifth one's at 105. That's how the share price moves throughout the day. And on your brokerage account or on share price tickers, that's what you're seeing depending on what time you're looking at. And that's how the chart will look And all it is just a reflection of the most recent sales price.
And you'll often see that larger companies' share prices move around a lot more. To go back to the Apple example, 90 million shares are trading hands each day. Like that is a lot of transactions where people are changing the price.
Yes.
And so that's why you'll see it just moving so quickly and so often. If you go down to the other end of the market where maybe very few investors actually exchange on a daily basis, the price doesn't move around as much.
Yeah. I mean, you can go super illiquid, or not so much on the main stock markets, but there are smaller stock markets where prices don't move. Because
no one's trading.
Trades might happen once a week.
Yeah.
So then I guess the natural question is, okay, so that's how the share price is set. What actually moves the price?
It's simple economics. Supply and demand is what drives the share price. So simply, if there is a lot of people looking to buy stock, the demand coming in, obviously that's going to push up a share price because the sellers are like, we know there's a lot of people wanting to buy the stock. Let's try and get the highest price possible. Whereas if there is a lot of people trying to sell a stock or there's less demand for it, then the price will fall because there's less demand. So it's pretty simple, but supply and demand can be driven by a number of things. Firstly, the company performance. If you just look at Nvidia, for example, Apple, all the big tech companies, incredible performance, profit results. People want to own that company. And so the demand from shareholders to buy these stocks increases the demand on the stock.
Yeah, and it's like the demand for people who want to own the stock increases, but also the willingness of people who already own the stock to sell it is reduced.
Yeah. So the number of shares available to buy is often reduced. There's macroeconomic factors, things like global events, inflation, interest rates all have implications on companies. And so that drives the desire for people to own stocks. And then there's obviously market sentiment. News headlines we see swing prices wildly as people react and try and make decisions based on what's going on in the news and just general vibe.
I mean, general vibe is probably the most important thing.
Yeah.
General vibe affects a lot.
So much.
Yeah. That's how share prices are set. Let's quickly touch on how trading works, because if earlier we said back in history the share market was just a convenient place for people to meet, knowing that other people would also be there to buy and sell shares, these days it's no longer a situation where we can just go to the meetup and start trading as well. The only way that you can buy and sell shares is through a broker.
Yeah.
So you can't, if you're in Australia, you can't sign up directly to the ASX, the Australian Securities Exchange, and say, I want an account with the ASX so I can buy and sell shares. You have to go through a broker, which essentially acts as your agent. They buy and sell on your behalf. They take your instructions and then go and follow that instruction in the share market. So the step-by-step process, it starts, you sign up with a broker. CommSec is the most popular in Australia, but it could be BetaShares Direct, Stake, Superhero, Sharesies, Perla. There's so many good options out there. You put an order for something that you want to buy, and then they go and match your order with a seller. They actually go and find someone who's willing to sell at that same price that you want to buy at. They execute the trade, they take your money, they get your shares, and they put it in your account.
Easy. So for anyone joining us for the first time, a bit to wrap your head around there, but I think, Ren, to close out, we should just be clear on what actually matters with everything that we've just said and what you just don't need to worry about, because it can be overwhelming seeing all the numbers flying around and figuring out which brokers to use and all those sorts of things. But fundamentally, at the end of the day, the only thing that matters is the underlying investment in the business.
The only thing that matters is...
Espresso Mates.
I was about to say that. The only thing that matters is Espresso Mates.
Yeah.
Bring everything back to the company that you're investing in. And then you can start to understand what is just noise.
Yeah.
And if you're investing in an ETF or a managed fund, it's the same principle. Just strip it back to what you're actually investing in and be mindful that the majority of what's happening is noise. Cynically, you could say that there's a lot of players in the finance industry that have incentives to get you to act. Like everyone makes money. The more things you do, the more you trade. Brokers make money. The exchanges make money. The registries make money. So there's a lot of bells and whistles to make you act. But sensible long-term investing is about not acting.
Yeah.
The money is made in the waiting. The money is made in doing nothing. So ignore the bells and whistles and focus on Espresso Mates.
That's it. Well, if you've just joined us for the very first time, welcome to Get Started Investing. There are plenty of episodes to get stuck in, just like this one. In fact, I would strongly recommend scrolling up and starting at episode 1. There are 12 episodes in there that will get you up to speed with everything that you need to know to get stuck into the market. Some of our best work, I would actually say. But you don't have to get started alone. Come and join us in the Facebook community group as well, where there's plenty of conversation going on. But Ren, that brings us to the end of today's episode. We'll pick it up next week.
Sounds good.